Hello, my Teaserking family. Professor here. Just a real quick one. So silver ended up $1.93 to 33.71. Gold at 27.21.41, up $27. So we have gold comfortably in the 2700s. Another $100 gain from the 2600s. 50 ounces gives you another 5,000. Silver, all right, you made $2, so you got 100 ounces, makes you $2,000, right? Silver should start taking off. We needed 32.75. Mark McGuire said. Now we're at 33.71. Putin said he's buying. Look for this to go crazy. Even Mark McGuire was talking about silver. My advice is tomorrow to buy. I don't know how much you can buy, but probably let's say it's $35 an ounce. I would buy at least 10 ounces is $350. I'm going to probably go buy 10. I got over 600 ounces. So my goal, if you don't have much, you're just starting. Luke, I know you got 2 box fulls. So as it goes, 1,000 ounces, it goes up $10. You make $10,000. So here's the reverse from gold. Gold, you don't have that many ounces, it goes up $100. 50 ounces, you make $5,000. Here, you got 500, 1,000 ounces of gold of silver, which is nothing because it's cheap, but it goes up $10. So every $10 you make 5,000, right? 10 times 10 times 500 is at a zero, 5,000. So there's many ways to shave the cat or whatever you want to call it. So again, that's key there, where you can get you can get if you got a lot of silver's about to run now. It broke 32.75. We're going to see $45, $50 silver. My guess is right after BRICS, the Kazan BRICS meeting on Tuesday. I think you're going to see it get really high and gold get revalued or go up really high. So hold on to your precious metals. Now, again, precious metals are money. Bitcoin and Rolex and Mantle cards are collectibles. They're investments. They are assets. Although I'm not sure that Bitcoin's an asset because it's digital. But let's call it an investment. Let's say it's like a stock. Okay, so we'll call Bitcoin a stock. So it's an asset. They're not money. Don't confuse that with money. Gold and silver are money. Oh, well, I can't go use it at the grocery store. Well, not right now, but it's going to be it's definitely got a value and definitely an asset, and it is money. But some people will take it. Like I said, my barbecue place will take gold. We'll take silver for the ribs. I want to show you one Egon clip. This is from Egon.
Explain to the people, obviously there is an impact on the gold price depending upon what the Fed does, but in the grand scheme of things, people give it way too much weight, more weight than is appropriate. Why you don't really hone in on these events? You kind of zoom out and look long term.
Well, if you're a short-term trader and you're running massively leveraged positions, of course you worry about every Fed day and every single economic data. In my days, in the 1970s, it was money supply, and everybody looked at money supply. No one looks at money supply today because it's growing so much that people become immune to it. And that's really what people should focus on, because that's what's destroying the currencies, which means the money in your pocket. And that's what's destroying the economy, because governments are undisciplined in running tight economy and a tight budget. If you are a medium to long-term investor, these short-term figures only have a very short-term effect. So worry about what the Fed is going to do today makes no difference.
If you feel tingling.
which is what we do. That's why I don't worry about the unemployment number, the interest rate numbers, and stuff like that. So, as he said, it's money supply. You increase the money supply, you kill the dollar, which is what's happened, which is why we're in the lifeboats of gold and silver. Now, here's one for you Bitcoin people.
This video is sponsored by Caleb and Brown. They help their clients buy, sell, and swap cryptocurrencies with a 24/7 personal broker service. Sign up today. So let's move on to our next article on why Italy is making a terrible decision on what they're doing. But yes, so Italy has taken an important decision about Bitcoin. Italy is one of the largest economies in the world and seems to have made an important decision regarding Bitcoin. Now, what is that decision? Well, Italy plans to raise the capital gains tax on Bitcoin from 26% to 42% as part of an effort to finance costly election promises while closing its fiscal deficit. So this is a terrible part because people are not going to want to be dealing with Italy. And that's the beauty about Bitcoin and crypto. It's like, oh, I don't want to deal with you guys. I'm just going to do some trades on the decentralized network, use a VPN and go to another and do it on another network. So yeah, so this is probably just going to drive away people. Like if America did something like this too, this is going to drive businesses out of it. So yeah, this is not a good call on them.
Well, he's a Bitcoiner, so he doesn't like it, but obviously they don't do that with gold. So what they're doing is saying we don't want Bitcoin. And then I don't know how you do a capital gains tax when nobody knows you have Bitcoin, right? It's a secret. It's on a blockchain that nobody knows. What kind of capital gains tax? How can you have a capital gains tax? Do people know what you bought it and sold it at? No. So this doesn't make sense, but this just shows you what can happen to Bitcoin. Not Rolex, not a Mano card, not gold and silver. So they are attacking Bitcoin as fine. I don't really care. I don't have any. Mark McGuire,
the elephant in the room is actually silver.
They now have to keep printing or we crash.
The elephant in the room.
Him and his elephants. All right, quickly, the BRICS Summit.
Hey, Andrew, on our last market update, and our last episode is only 2 weeks ago. It seems like much longer, but again, we recorded that in the Chinese Golden Week holiday, and ahead of what you predicted would be a large politically sought non-farm payroll beat. And while you expected the Fed to try to rinse out these fresh new gold buyers, you had also identified exactly where the central bank physical orders were situated. And once they had been hit, it would lock in the next higher physical stair-step support, and we would make fresh all-time gold highs. And this played out just as you predicted now, Andrew. This is amazing. And here we are now as we get closer to the BRICS Summit next week. Can you tell us what you're expecting now ahead of this BRICS Summit?
Yeah, great to be with everyone. Thanks, Shane, for gathering all these questions for us. But you know what? The good thing is, because we face the physical market, it's not rocket science. It's just about identifying where the deliverable NSFR compliant spot gold central bank bids, not just bids, but where their buy stop triggers are. In other words, they can if it dips, they'll buy, and if it gets to a certain level, they'll buy. And it's where they are located. Against, really, we weigh that up against the scope of how many of these led by the nose 96% leveraged speculators can be wash and rinsed out before their synthetic supply runs into this 100% fully paid for physical gold. And it's all thanks to Basel III that we have that change in behavior. Now, thing is, leverage works well if you're on the right side. And it's and obviously it's manageable when you're not betting against a physical deliverable commodity, which can be, obviously, unless it's a deliverable commodity, it can be cash settled. But once the tail wagging the dog, 96% leveraged gold sellers run out of speculators to sell into, then they're forced to 100% fully fund these bets. And that is to back up what flows out of the casinos, exchanged for physical backdoor. We've covered it a million times what that is. And then it lands loco London as physically deliverable gold, as benchmarked at one of the two, either the AM or the PM gold fixes. Now, this synthetic gold has just been alchemized into a first-tier asset class. And so it's flowed out of the COMEX in leverage form, and suddenly it lands through this EFP mechanism into and is alchemized, as I say, into a first-tier asset class. And that can be then employed as that kind of instrument. It can perhaps acting as a safe haven hedge on risk that runs alongside US Treasuries. But regardless, these once price-setting synthetic bets immediately become physically deliverable, meaning these sellers must go to the 10 times larger NSFR-compliant physical foreign exchange markets to buy the physical gold. And this is the important point, at the market price to physically deliver. And this is when reality bites. And it's precisely